Good morning, hit and run candlestick profit traders. How are you doing today? This is Rick with Hit and Run Candlesticks. It is August 4th, 2011, approximately 8:10 a.m. East Coast time. After several days to the downside and 5 days trading below the T-line, yesterday we put in a hammer and our lows yesterday came just, let's see, there we go. Our lows yesterday came within just pennies of what we had talked about last week as a possible low. What we need to see today is certainly positive trading. Positive trading does not have to be necessarily above today's hammer, but it needs to be moving certainly above yesterday's lows and some signs of bullishness stepping in here. So we want to see a positive closed candle today. If it does put in another hammer type candle, we want to see that tail. That's what shows us that the bulls are stepping in. I do feel that we're in an oversold condition right now with 8 days now. Let's see, 1, 2, 3, 4, 5, 6 days. 6 days now trading below the T-line. That puts us in an oversold condition, so we may see an oversold bounce or rally. What it needs to do is get up over the 200 and the 200 and the T-line to make me a bit more of a believer that we're actually trying to move up. The next area of contention will be somewhere around this 130.80 mark, something in there. But let's take one step at a time. We'll worry about 130.80 if we can get through the 128 above 129, we'll say, if we can get above 129. So we want to watch this very carefully. What I'd like to do is, and you can see that we're playing with somewhat of a double bottom. I know that we came down lower, but if you look at the closes, we're setting up a nice closed double bottom. So we'll see if this turns out to be anything bullishness or the bears going to keep kicking us down. What I would like to do is switch this to a weekly chart real quick. And let's make this a little bit bigger. This kind of gives a view of possible targets to the downside. You can see where we've yesterday came within just pennies of our first target to the downside. Second target is around this 119.67. We could round that up to about 120 area as the next target to the downside. And this area here, what is this? About 116. That's the 200-day moving average on the weekly chart. If we take these lows over here, and let's throw some fib lines on this. Let's get them close. This 119.67, 120 area basically, you can see that's the 50% retracement off of these lows right here, and that's why we have that as a possible target, along with the fact that price pushed up through the 200-day moving average and then pulled back, creating support right there with the 200-day moving average. And based on the fib lines from these lows to this high, that also is about the 50% retracement. So that is a very possible area to come back into. Of course, that's based on any weakness in the market, and we'll just have to see what happens here. I would suggest no hard trading right away in the morning. I think it's probably best to sit back a little bit and let this market show you its hand that it's holding, at least a couple of cards. So we'll watch for some good trading today. We've got some good stock picks, I feel, and we will see about making some dollars. Hope to see everybody in the trading room. Thanks for listening. Talk to you soon.